Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well guys, I hope you will not be upset and regret by the moment that I have decided to dedicate one more video update to the Japanese yen, since the situation here is developing rather interesting and it's much more active here than on the euro currency, although on the euro currency in general our plan is working. So market shows some inability, probably we could treat it as an inability to continue move higher on the euro currency. And now it develops a downward action, although market still stands inside of the body of the pattern. So that is our pattern. Just brief look at the euro currency. Our pattern market still stands inside of it, and in fact this pattern will be triggered only when the market will take it out of these lows. But in general, these spikes to the upside on the intraday charts, they are look a bit more horrible, if we could call it. Here it's a bit more shy, but anyway, this some kind of the sign that market wasn't able to turn to the upside and continue move higher. So that's why this increased the possibility that this pattern probably will work. The targets, the analysis, in fact, the same. So now let's return back to the Japanese yen, because here a bit this pair needs a bit more our assistance and some more explanation here. Well, on the daily chart the picture is the same. So we have the ABCD pattern and CD leg of this pattern is much flatter. That tells us that there's some retracement, and that the fact that market will respect the point, destination point of this ABCD pattern is greater than when the CD leg is faster and steeper than the AB. The CD leg, when the pattern has flat CD final leg, it means that market just is gradually losing the pace to the downside, and we could count the probability of showing the respect and upward action is greater. That's why we could rely on this. Well, the minimum target usually when the market shows the respect of the completement point of the ABCD pattern, usually the 3.8, the minor retracement. That's the minimum target. Also take a look, that will be the previous swing low. Market could retest it. Well, but very often market usually also can show the 618 retracement. That's normal. ABCD completement point, 618 retracement proceeding to the next target. That's also very quite common and absolutely reasonable action. And this level stands at 99.06, very close to the monthly pivot point that has been tested yet. The pivot point stands at 98.77. It's right here. Well, but since till the end of the week we did not have a lot of time, probably we should be focused first on this target, is 98.10. It's right here. Also take a look. Yesterday we said that probably we could get the bullish engulfing, but that hasn't happened. Since market has decided to show the retracement that we expect within the whole day, right near to the closing of the session during the United States trading session. It's right here. But currently we could get another one. So that could be the morning star, right? So candle down, some sort of the doji. Although on the Forex you can't see the pure morning star, since market has no pause in the trading within the week, and upward action. So that could be the morning star. The target of the morning star, minimum target, is approximately the same, the length of the bars. So if we suggest that market will give us this pattern, and we count the length of the bars of this, the length of this pattern to the upside, we will get approximately the same areas around 3.8 resistance. So let's be focused on this target. So now we have estimated the target of the potential pattern. Let's shift to the 4-hour time frame chart. On the 4-hour time frame chart, you see how market reacts on the reversal patterns that have been formed yesterday, and we have discussed it. That was our context and foundation for trading. Also take a look, that is the weekly pivot support one here. So now we see the reversal to the upside. Market has broken up, has shown the retracement that we expect to see, so we will discuss it a bit later, and shows now expansion. So market very close to the 97.54 first resistance from the right wing of the butterfly. That is our target on the daily time frame. Take a look that here we also have the 618 resistance level, 98.14, or probably better to say 15. So this level and that level creates confluence resistance on the 4-hour time frame chart. I just do not draw this level here because this spike is too far from this area. It's not quite comfortable me to draw this, but you guys understand what I'm talking about. Here we have the combination of the 618 resistance on the 4-hour time frame and 3.8 resistance, and that's why this will be the confluence resistance area. That's our target on the daily time frame. 98.10, 98.15. This minimum target, the possible respect of the daily ABCD pattern. This target, in general, agrees with the this wedge pattern. If we will treat it as a 3-drive pattern, then the target should be slightly higher than this spike. So that's very close to this one. Now, trend has shifted bullish, by the way, here. Now, what we could do within the today trading session. Let's take a look at the hourly time frame chart. On the hourly time frame chart, see how market shows what price action market has shown yesterday. Last price up. Here we have, by the way, the double repo sell pattern that particularly has triggered retracement right to the 618 support or a 15% support. It's right here. That was our entry point, as I said. Watch for retracement before taking a long position. If you even have entered right at the 3.8 support, that's normal. That's absolutely not the problem. But if you have seen this double repo sell and even maybe make some pips on it, or at least wait when it will work out to the 50%, the minimum target of the double repo, then you guys have done well. This really was the just a gold mine. Japanese yen now is a gold mine of the different patterns. Now what we have now, so double repo has worked nice. That was an entry point. Now we have extension A, B, C bottom. One hard target stands at, take a look where it stands, 97.51. Return back at the 4-hour time frame chart, 97.54. So that will be an agreement right there, ABCD pattern. So if you trade this on the short-term chart, think about the taking profit here. If you're a scalp trader, trade on the hourly time frame on the 15-minute chart, because right from that area, some retracement could follow to the downside. Right? That will be the resistance and agreement and completement of this ABCD pattern. Now let's count these bars. I just a bit increase the scale. 1, 2, 3, 4, 5, 6. If market will give us 1, 2 more bar candles to the upside, we could get the repeating situation of this one. So this thrust could be suitable for double repo pattern, brand body buy, or something of that sort in the very short-term scale. Anyway, market should turn to the retracement down, because we will get the completing point of the ABCD, and retracement could be either to this confluence support. By the way, guys, these levels I have drawn with the focus number right at the 100% extension, not at the current high, but right at this area. So that's the level that will be here if market will and when it hit 100% target. Okay, so when market will complete this, retracement should follow. Retracement probably we should keep an eye on these two levels. First one is the confluence support 97.8, 97.15. That's the first level to watch for, and ultimate level for this retracement that also possible, but I prefer to see the retracement only to this one. But still, this level is also possible, 96.92. Why I think that the retracement probably should stop somewhere in this area, because take a look, this is really steep action to the upside, and take a look, the CD leg even steeper than this already steep AB leg. So that is some sort of the upward acceleration. In such circumstances, the even retracement to the 97.25 is possible. just the brand bother buy and continuation to the upside. That is also possible. Why I think the retracement still has the more chances to reach this level, because market will be at agreement on the 4-hour time frame chart right here. That will be not just the complete maintained ABCD or just single fib resistance. That will be the agreement. That's why retracement could be a bit deeper. And now the final moment on the Japanese yen. Take a look where our ultimate extension stands. 1618 extension of that ABCD pattern stands at 97.93. Return right back again on the 4-hour time frame chart. 97.93. It's very close to the 98.15. Very close to the 98.11. Our target of this potential pattern and minimum target of the respect of this ABCD. So you can see how puzzle has been collected together. The different parts of this puzzle has been collected together. So that's why I really like the situation on the Japanese yen. It's very interesting. That's kind of setups that I prefer to trade when details on the different charts combines with each other and suitable to each other. That just gives more confidence, and that makes you think that it's really more chances to success than just separate different parts of the puzzle in the different charts that have no link between each other. Well, that's why I have decided to dedicate some more time to the Japanese yen, because I think that's really worth it. So let's continue to monitor this situation. If you have skipped the initial entry here, don't be upset with that. If market will show this retracement, you could get another entry on the retracement. And again, guys, the one thing that we do not want to see here with this retracement, we do not want to see such sort of action to the downside. We do not want to see the plunge, really significant candles, long candle, one candle that could just erase the most part of this upward action. We do not want to see this one. We want to see gradual action, some sort of the choppy and sloppy, something of that sort. If we will get some gradual retracement, maybe some even ABCD or something of that sort, that will be much better. In this case, we could think about taking the long position around this level. Enjoy, watch for Japanese yen, since it will be really interesting.